Welcome to day 3 of the Trader's Lessons series. By now you've learned what trading is and what assets you can trade. Today we're taking a major step forward. We'll show you how a trade is actually placed. Whether you want to buy gold, sell USD ZAR, or invest in a tech stock, the process is similar, but the tools and terms can feel confusing at first. This lesson will walk you through a trading platform, explain key order types, and introduce 2 essential concepts: technical and fundamental analysis. Let's get into it. Step 1. Choose a platform and asset. Once you register with a broker, you'll be given access to a trading platform. This might be MetaTrader, a web platform, or a mobile app. Most platforms have a similar layout: a chart area to view price movements, a market watch panel with all tradable instruments, a trade panel or order window, and an account dashboard showing your balance and open positions. Start by selecting the asset you want to trade. For example, let's say you choose gold. You'll click on it and open its chart. You'll immediately see a price chart with candles or lines showing how the price has moved over time. Step 2. Understand market and entry orders. Now that you've chosen an asset, it's time to place a trade. There are 2 main types of orders. Market order. This means buy or sell immediately at the current market price. If you think gold is going to rise, you click buy. If you think it will fall, you click sell. The trade is executed instantly. Entry order. This lets you set a target price. For example, gold is currently $3,300. You want to buy if it rises to $3,310. You place an entry order at $3,310. When the price hits your target, the trade opens automatically. Entry orders are great when you don't want to watch the market all day. Step 3. Use stop loss and take profit. Most traders use these 2 tools. Stop loss. This is a protection tool. Let's say you buy gold at $3,300, but don't want to lose more than $50. You set a stop loss at $3,250. If the price drops to $3,250, the system closes your trade automatically. Take profit. This is your target. If your goal is to make $100, set a take profit at $3,400. When the price reaches that point, your trade is closed in profit. Think of these as your safety net and your goalpost. Of course, the stop loss comes with a cost. Many times the price hits the stop loss and then it goes back to your direction. But instead of making profit, you already realized a loss. So it is up to you to decide to use it or skip it. Step 4. Position volume and leverage. Before clicking buy or sell, you'll need to select your position volume. This controls how big your trade is. Example: 1 unit of gold, 10 units of gold, 100 units of gold, etc. Your broker usually offers leverage. If you have 5,000 rands and use 1 to 200 leverage, you can control 1 million rands worth of an asset, but the risk is also magnified. Use leverage carefully. Step 5. Monitor and manage your trade. Once the trade is open, you'll see live profit/loss updates. You can modify the stop loss or take profit levels. You can close the trade manually at any time. Watch the price. React to the news. Be patient or act fast depending on your strategy. Technical versus fundamental analysis. Let's introduce 2 key concepts that help you decide when to trade. Technical analysis. This is the study of charts and patterns. You look at price movement, trends, support, resistance, and indicators like RSI, moving averages, Bollinger Bands, and more. Traders use technical analysis to decide entry and exit points. Example: if gold bounces off a support zone, I'll buy. If RSI shows overbought, I might sell. We will go deeper in those indicators in some of the next lessons. Fundamental analysis. This looks at economic and political factors: inflation reports, central bank interest rates, unemployment numbers, geopolitical tensions. If the U.S. announces a high inflation rate, the U.S. dollar might weaken. If there are new tariffs from USA to Europe, the indices will drop. Smart traders combine both approaches to improve their decision-making. Let's recap how to place a trade. 1. Choose an asset on your platform. 2. Decide between market or entry order. 3. Set take profit. 4. Choose the size of your position. 5. Confirm and monitor your position. Simple, right? Now you know how to open positions. To improve your timing, use technical analysis to read charts. Follow fundamental analysis to stay ahead of the news. Trading is a skill. You don't need to be perfect. You just need to be prepared, informed, and disciplined. Coming up in day 4. In the next lesson, we'll go deeper into fundamental analysis. including how to follow the economic calendar and what major news events to watch for. If you're ready to go from watching to doing, click below and take the next step. Until then, keep learning, and we'll see you in the next video.